What's going on, everyone? My name is Nicholas Merton here from DataDash, and hope you guys are having a fantastic day wherever you are, because in today's video we are going to be talking about one of the darkest little known secrets about the crypto industry that you need to be made aware of, and I've seen little to no one talking about when it comes to crypto markets. Today, I'm going to be talking about a concept known as the slow rug, and it is one of the core reasons why I believe we have not only had one of the longest periods of time we've spent at a prior all-time high from a prior cycle, both in Bitcoin's price, but also for most altcoins. It is one of the darkest secrets that people have not told you about, and you need to be made aware of it in order to make sure that your portfolio returns don't stagnate or potentially stall in the event of an upward trend in the market. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Now, I want to make it very clear here today, guys, what I'm talking about is not fun. And in fact, what we are seeing here within market price is a clear demonstration of this. We can see that we've struggled for the last 4 months here at this price range, which was the same range that we'd faced resistance back in November of 2021. So for nearly 2.5 years, we have not been able to reclaim past that point. And this is one of the longest windows of time that we've retested towards a prior range and have faced stagnation. So a lot of people are wondering why this is. Are we not getting enough new ETF inflows? Is there something wrong in the market? Well, we could debate time and time again about whether or not crypto markets are in a healthy state fundamentally, but we can see clearly from a price action perspective that we are struggling, especially on other coins, the broader crypto market, to be able to get above that prior all-time high. We in fact weren't even able to retest it and are at about less than 50% of the prior all-time high value back in November 2021. Even as there are new coins coming to market every single day, new narratives emerging, you name it. So why is this happening here? Why are we more than 50% down from where we were back in November 2021? Today, I'm going to be talking about the concept of the slow rug, and I'm going to give a pre-warning here. I'm going to be naming some names. I'm going to be talking about some projects where this is very likely happening and we have prior evidence of it happening. But at the same time, I want you to be understanding in the sense that I'm not here to badmouth these projects particularly. There are an abundance of altcoin projects that meet to this and are definitely demonstrating similar signs of this, both in the way that the project is run, but also in the price action where it is very visible and clear. So I want to go ahead and talk about what the slow rug concept is. As we see an ability for anyone to practically create an altcoin, and now with some of the recent SEC losses in court making it more favorable to take the risk of going out and launching a cryptocurrency, there are an abundance of altcoins and new narratives that have taken over the market. And obviously a lot of retail investors, but also some who are larger, more institutional investors are interested in participating as well, putting their capital in to speculate that these projects can move up in the long run. And while I have nothing wrong with speculation, the problem is that if you really have a near zero to little frictional cost to you to go out and launch a new token, this allows for people to launch an abundance of new ideas and potentially make money off of you in the process. Now, I understand that a lot of people out there probably have good intentions. They want to launch a project, they want to build something that maybe creates value in the market, but whereas in traditional stocks and publicly registered markets that are regulated by enforcement agencies like the SEC and need to provide actual abilities to generate revenue or quarterly reports and actually produce something of value where you charge for a product or service, crypto tokens don't generate revenue. The vast majority of these tokens do not generate revenue. Protocol fees are not revenue. I'm talking about an actual product or service. And because these things aren't businesses, they are at the end of the day practically speculative tokens. And being pretty much speculative tokens gives the insiders, the team members, the early stage investors an incentive to sell at a much higher price from where they either invested or created the token, which was practically zero for the team. It wasn't worth anything before. So this kind of game of the slow rug starts to come into play. And I'm going to talk about how this actually plays out. The first project I'm going to be mentioning here, and I know this will ruffle some feathers, is Chainlink. Now, look, at the end of the day, guys, I talked about Chainlink earlier than most people in the crypto space. You can go back on my channel. One of my most viewed videos, if you scroll down on a couple of lines and stuff, was essentially Chainlink. I was really early to the trend of oracles. I think the technology is definitely valuable for the crypto space to make smart contracts more useful, to tap into external data sources rather than just utilizing data within a blockchain itself. There's obviously clear limitations that Chainlink is breaking there. And I know there is Teller. I know that there's a ton of different Oracle solutions out there. But at the end of the day here, I'm not even here to talk about fundamentals. I'm not here to talk about Sergey and the team. I'm not here to talk about whether or not I like Chainlink fundamentally or whether or not you can make some money trading it in the next couple of days. What I'm here today to talk about is one of the biggest fundamental things that has kept Chainlink from outperforming Bitcoin since back in 2020 when it set in its peak here. In fact, percentage-wise, from that period of time, Chainlink has traded down over 86%. And it has been roughly neutral here. And I know I'm picking the absolute high, but it has basically been on par with Bitcoin's performance since July of 2019. And while that may sound great, that means you had to have pretty much been an early stage investor all the way back in July or June of 2019 just to break even with it. Not a really great return when there are altcoins that are outpacing Bitcoin 5, 10, 20x. Now, why am I bringing up Chainlink here? Well, Chainlink is a prime example of a project who is slowly but steadily increasing its circulating supply of tokens. So we see here very clearly that Chainlink is an $8.6 billion project here. But a way to kind of visualize my point is that we can see on an actual market cap basis, we're roughly around the same range here we were back here in 2021. On a price level, we haven't even come up close to that range here. Back then, in order to get to that market cap range, the token price needed to be $33. Nowadays, we're at $14 per token, but the market cap is clearly not that much further down from back here in the past at this range. So what gives? Well, the key factor we need to consider is that over time, Chainlink is essentially expanding its circulating supply. Now, this alone is not a terrible thing. Stocks dilute over time to some extent in publicly traded markets, and cryptocurrencies, as they make very clear and available through CoinMarketCap's data, are increasing their circulating supply. This is not technically illegal by any means, at least according to my understanding of the law, but I'm here today to talk about why this matters and why it very well explains that Chainlink has not been able to make serious expansions against Bitcoin here, and it's been pretty much flat in its returns since back in May of 2022 or going all the way back to June of 2019. Because basically, as time progresses, the supply is expanding. Chainlink has been going through a pattern where every generally 2 months or 3 months, we generally see a period of time where there's no expansion, but then a massive expansion on a monthly basis of a couple million tokens. So we can see that roughly speaking, that on a given period of time, you're going to get an expansion here of around roughly 20 million tokens, give or take. Now, the reason why this is happening, and you'll probably hear from people, is that the team has expenses they need to cover. They need to cover for team members and operations. And at the end of the day, we come back to the point I talked about earlier. Chainlink does not generate revenue, or at least enough substantial to sustain its business. Otherwise, they really wouldn't fundamentally need to be increasing the circulating supply. They would keep it locked up. They would do token burns, you name it, right? As any given crypto project that I think is generating solid revenue would do. Unfortunately, though, this increase in supply of around 20 million tokens every quarter or so, right? A couple times a year, 20 million tokens. If we take the current existing market price of Chainlink, that's $14 per token. Now, I'm not saying that all those tokens are being sold right away. I'm not accusing the Chainlink team of anything, but at the end of the day, 14 times 20 million, you're talking about hundreds of millions of dollars of new Link tokens hitting the open order book that could potentially be sold, that are increasing the available supply in the market. And that is why, very clearly, while market cap might be looking pretty fine and dandy, pretty much in the mid-range here of the prior cycle highs, not too far off, price action is much lower from that prior range. So the big point here I want to emphasize is that as supply increases, it's very difficult to sustain the previous prices of the past. This is a fundamental reality here. You see this with stocks that have to go through heavy dilutions because they're facing expensive debts, they're not generating actual profit, but are burning through expenses on a weekly or monthly basis. And therefore, they need to essentially dilute their share base. In the case of crypto, it's basically unlocking other locked tokens that have been sitting on the sidelines for some time that now can be sold on the open market. In fact, back in February, right when Chainlink had risen from about $6 to $7 per token back a couple of months ago towards this upper range, the highs that we saw back in February and March, the team had basically distributed out a new wave of tokens, unlocking 19 million Link tokens as we discussed. Now, Again, do we know what's going on with those tokens? No, but we can possibly guess that as they're being sent to Binance, that as they're being unlocked, whether it's for expenses or for insiders making a killing, I'll let you determine which one of those it is. Maybe it's a little bit of both. At the end of the day, it's millions upon millions of dollars that are going to hit the order book, and there's got to be buyers to satisfy that demand. So that's the key point here, guys. It doesn't matter. At the end of the day, I know some of you guys might really like Chainlink. You might have it in your portfolio. Some may see the value in what I'm saying here. Some will feel like I'm attacking the project. Again, early stage supporter of Chainlink, but it's the reason why I trade projects. I don't invest in them. Because at the end of the day, I understand that there are players out there, very smart players, who are launching these projects, building strong narratives, and at the end of the day, it's a question of whether or not they are going to be able to suffice in making those projects revenue and income generating in the long term. Take another example here, Cardano, another big project, big fan base, not here to insult Charles Hoskinson or the broader Cardano technology and community. Again, whether or not you're a fundamental fan of it is out of the question, or whether or not I'm a fundamental fan of it. At the end of the day, the price is down 90% against its prior highs in September of 2021 against Bitcoin. And while we had a brief window of time here where Cardano got some optimism, it is continuing to bleed against Bitcoin, down to a point where on a market cap basis, it's basically equivalent here to where it was back all the way here in May of 2022, here in February of 2021, or even back at its prior highs back in 2018. Its price, on the other hand, is not looking very good, right? Whereas market cap is relatively close to the prior high levels, we can see very clearly that on price, we are seeing a clear inability to get back to those prior all-time highs in the past. And that's really what matters here. If Bitcoin's breaking all-time highs, we want the price of Cardano to move up as well. Well, what's holding it back? Is it an inability to deliver new exciting technologies? Is it whether or not Cardano is superior L1 to Ethereum or not? Those are questions people usually get caught up on. I think the answer here is the month-over-month continuous increase of token supply of estimated around 0.17% each month. Now, it doesn't sound like a lot, but if you consider on an annualized basis that this is continuing to tick up here, and you consider that each month here, we're seeing, generally speaking, around, if we do the math here, I think around roughly 60 million ADA tokens hitting the market at a current price of around 39 cents. Again, you are talking about millions upon millions of dollars hitting the order book here. And I'm talking about the double digits here. We're talking about serious millions of dollars of tokens that are hitting the order book. And we've got to have buyers to satisfy that, right? Irrespective, again, of whether or not you think they're in it for the run of the money real quick or if they're building something long term. You need to ask that question as a trader. Put aside all the BS, all the debating about whether or not the protocol is fundamentally valuable or not, or if it's going to beat Ethereum long term, or is it the Ethereum killer? Is it going to be the main DeFi platform? At the end of the day, you got to ask, where are the buyers going to come from? Where are those buyers going to come from? Because clearly within price action right now, they are not coming to any serious form to be able to drive up prices. This to me looks like a slow and steady distribution game, a game in which you can continue to save face doing stuff and continue saying that you're working towards things and doing protocol updates and actually spending some money on hiring people and doing things. But at the end of the day, you're slowly looking to exit and sell tokens that really originally didn't have any value for hard, cold cash or Bitcoin or Ethereum or other different cryptocurrencies out there. I'm not saying any particular person's doing that. I'm not saying there's one individual or the entire team is doing that, but I think some people are. And I certainly believe that some early stage investors are doing that. And the third one here, which I have no hesitation to talk about here, is XRP. XRP has not visited its prior all-time highs against Bitcoin since January of 2018. And this is one that I see heavily pushed from particular YouTube channels. I see it heavily pushed that this is the leading central bank digital currency of the future and that they're going to use the XRP ledger and yada yada whatever. Might be right about that, but it certainly hasn't been true yet. And you want to know what's been really brutal here? The cold hard reality, and I know this might hurt some people's feelings, the best friend you're going to have is going to be honest with you, not sell you a lie. The price at level has never been this low since back in December of 2020, and the same range it was at back in February 2017 and June of 2014 against Bitcoin. Ouch. And I only say this with such vehement confidence, guys, because the price says it. We can see very clearly that if we take a look throughout history, well, the price has been relatively flat at this range since 2017, whereas Bitcoin from back during that window of time has gone from 3K to around the $61,000 level it's sitting at now, right? More than the 20x. XRP, its market cap, has nearly tripled since that window of time, right? And that is because we look at the data. This is publicly verifiable data. It's provided by CoinMarketCap here. This is a website called charts.cointrader.pro. And all you have to do is just type XRP. It's going to come up here with a couple different items. We can pull all these different data points from CoinPaprika or CoinMarketCap. You click supply and you get it printed on the chart here. And what we see is that month over month, we can even summarize this unfortunately they don't have annualized basis measurements like TradingView, but we can essentially scale over a 12-month period, or maybe even just from 2014 or the beginning of the year. And we've seen about a near 3% expansion in supply. Again, doesn't sound like a lot. I'm assured that XRP, if there are banks actually using the ledger technology that Ripple Labs has built, and therefore they need to sell some amount of XRP tokens or have some kind of financing. Look, not the end of the world, but if you consider really how much this is, 2.75% of a coin whose market cap is $26.3 billion, it's not chump change, serious money. And we've got to ask a fundamental question about whether or not it is reasonable to be unlocking that amount of supply, to be diluting the base of that token so much. Because we've seen over the course, since back during really the bear market back in 2022, or back here really if you want to pull it back towards really when there was the capitulative lows, kind of back during the summer, it's up 15%. And you don't think that that may be impacting, as much as some of you might be fans of XRP, you might believe in the narrative, you don't think that that might be impacting why the price is underperforming so badly against the market, even with the supposed victories against the SEC. I think a lot of people have been duped into supporting people in this space who are using you to make a lot of money. And unless you really bought XRP back here, when I remember trading it back in 2017, well, whew, we made a killing on that. I don't think a lot of holders are making much money on this, and that's a fact. Anyone who has bought here in the past year is either flat or down on their money if they bought during the euphoric periods. Who's been holding? That's the key point here. Holding versus trading. If you can trade on momentum, you buy low and sell high, you get in when there's the early stage signs of momentum and you get out when the signs of momentum are starting to fade, you can win big. And I'm sure that you can do that with XRP. I'm sure you can do that with ADA, the ADA token for Cardano. I'm sure you can do that with Chainlink. And I'm not here to say you can't make money with them, but we know clearly, and it used to be public record, that the Ripple Labs team would report on their XRP sales and look at how they would sell into optimism. Q1 of 2018, bull market highs. Back then, 167 million in that quarter. Here in quarter 4 2021, selling over $717 million tokens. Did their expenses go up from 70 million a couple months ago to 717 million? I understand that some companies will do large equity raises when the token price, and in traditional equities, that when a stock is doing phenomenally well, companies want to raise cash, and they do it when it's best suited to. I get that. But this, to me, looks a little fishy, going from 32 million and 70 million up to around 717 million. Come on, this just looks like highway robbery at the end of the day, in my opinion, right? I know I might be barking up a tree here. I know that some people might think I'm trying to, badger these projects particularly. But guys, my point here today is that this is going on across the entire crypto space. It is happening in small caps, it's happening in mid caps, it's happening in the large caps, and it's happening even in all the hot narratives you might be thinking about, right? It's even happening as well in areas like meme coins. Right? Now, meme coins are a little bit better, ironically enough. I know a lot of people are going to probably disagree with this or be like, Nick, why are we coming to the defense of meme coins here? I'm not saying meme coins are totally immune to this. They're definitely insiders. We've started to see now that a lot of insiders have started to work with exchanges to front run listing new meme coins that they have large amounts of supply in, or they bought on spot at a much lower price, and then magically now the exchange listing's out and then maybe goes up a little bit more and then they distribute and sell it. There are definitely bad things about meme coins, but the thing I like about meme coins is it doesn't try to lie to you. It doesn't try to tell you that, oh, we're building this thing over here and it's going to be useful and valuable for the world and will generate revenue, and then you never do, and it's just kind of this idea that's sitting around, and it's not trying to propagate a lie. Meme coins are clearly baseless. They are clearly meant for speculation. They are meant to be funny, to tap into the community aspect of meme coins and hopefully appreciate in price and give you an opportunity to either, buy low and be able to sell high, make a lot of money, or be on the other end of the stick. There's no lie sold to you at the end of the day. And I like that about meme coins, that at least it's being honest with you. But again, they'll suffer from the same issues at the end of the day. And again, I'm not here to tell you should hold meme coins. I'm here to tell you you can trade them. And as we do with meme coins, we use momentum indicators and gauges. We use our moving averages that we've talked about in this channel. In more traditional crypto assets, we use the 21-day, the 100-day, the 200-day. In the case of, say, meme coins, for example, like Pepe, I use the shorter time frame moving averages that let me gauge momentum. I use 4-hour time frame moving averages, and I use a 9 MA, a 21 MA, and a 50 MA to gauge general momentum. And what I look for here is entry points generally along that mid-range, the purple line here, the 21 MA, for potential entries in that pocket. If I see buyers coming in there and holding support, that is a sign to me that confidence is there. And when I break back above that blue moving average, that's my gauge to go long and just continue riding the wave here. But you'll notice that as we start getting more cozy by spending time underneath that purple moving average, the 21 MA, and start spending time with the orange line or the 50 MA, then you start to see your heavy corrections. And from that point on, Pepe continued to struggle until it went to a lower point where it was able to clear back through the moving averages and continue climbing higher, right? So my main point here is I'm not here to sell you that these moving averages are perfect, but they are much better than just hodling and trying to guess that you're picking the right play. You need to let the market show you. The real capital, money speaks louder than words and research. And if you see that people are willing to continue paying a premium on something, or that the price is just generally going up, you gotta lean into that when it comes to altcoins. Altcoins are all about momentum of that speculation, right? So this really brings me back here to talking about altcoins at the end of the day, guys. We can do a ton of TA on the space here, but very clearly, altcoins have faced a pretty substantial correction here. And I don't see them rebounding substantially anytime soon until the broader altcoin space can really start to keep on top of the 50 EMA on the 4-hour time frame and start utilizing the shorter time frame moving averages as support for ascension higher. There's no real reason to go long altcoins. In fact, this has been serving as resistance. We barely just now have actually spent some time above the 50 EMA, which is a positive sign versus the past few months, but it's not enough of a sign for me to go all in and long and get really bullish altcoins. So this is my point here, guys. Above all, if you take anything away from this video, right, to consider that there is one important thing when it comes to trading altcoins, and it's momentum. And if you don't have the momentum there, you got to start asking the fundamental question. Why is it that things are going sideways and starting to pull back? Could it very well be that projects are increasing their circulating supply and slowly but steadily distributing, not selling too hard as to scare or cause panic or drum up concern from the broader user base of the project, but instead slowly and steadily sell so you don't suspect otherwise while they make money time after time again because they are patiently playing the long game, giving an illusion that they're building something of value, that they're moving towards revenue positivity and somehow setting a fundamental demand for the token you're putting all your money into. It is likely not going to happen for over 99.9% of projects, and it is very likely that your token is going to underperform Bitcoin if you are holding it long term. When the narrative fades out, when the momentum stops, and there is much more sellers and long-term bag holders than there are new entrants. It's an uncomfortable reality. I may seem like I'm coming across in a really rude way, I'm giving you guys the cold truth, and I only know this because I've traded in crypto since back in 2017. I've been trading in financial markets since 2011. You see the same exact activity with penny stocks and small caps who aren't able to get to revenue positivity, and it's the same function whether or not you believe cryptos are securities or not, or whether or not the SEC says it's a security or not. It is the same thing that is going to leave you losing money. And as the crypto space gets with more and more projects, more and more tokens, Memecoins, for example, on CoinMarketCap, right? Fair statistic to share here, there's over 10,000 Memecoins on CoinMarketCap. And even if there's only like a couple hundred that actually have some kind of real maybe potential market value where you can buy and sell, that's still 500 new tokens out there, some of which have tens, if not hundreds of millions of dollars, if not billions of dollars in market cap. And that has to be justified by having at least an equitable amount of buyers versus sellers coming in, just to maintain prices. But if you get much more sellers, those prices will go down and you will be caught holding the bag. And I don't want to see you guys in that position. I rambled on a good amount here today, guys. I got a little fired up, but I don't know. There's nothing wrong with selling a little bit of positions if you create something. But to me, it seems quite criminal to create little to nothing of substance when it comes to building like a revenue generating product. None of these projects are doing that. And they're making hands over fist off of your hard-earned money. The unfortunate thing with the slow rug is that you just don't realize it yet. Thanks so much for tuning in today, guys. If you enjoyed this video, consider dropping a like. No sponsor or anything today. Just focusing in on the important things that matter so you guys win out in markets. Take care, everyone, and I'll see you guys next week on Monday.